maybe he might run it by.
I mean, at 4 in the morning, does he have an editor standing by?
I don't know.
I doubt it.
It is a question people ask. I don't
Certainly.
know.
Meantime, shares of Takata surging more than 17% in Asian trading, hitting their daily limit for a third straight session. The stock is up more than 60% on the past week on the possibility the company is nearing a settlement with the Justice Department over its faulty airbags.
For more on the markets, let's bring in Michael Tyler, Chief Investment Officer at Eastern Bank Wealth Management, and Karen Cavanaugh, Senior Market Strategist at Voya Investment Management, our guest host, who I don't think we introduced yet, Peter Bookvar. Did we? Okay. Chief Market Analyst at the Lindsay Group.
No, we didn't. We didn't.
We did not.
No, we just brought him in.
We may have. We may not have. I don't. It's also a CNBC contributor. Okay, Karen. Last time you were on, you said I don't think you were. I think I needled you because you didn't really give Trump any props whatsoever. You said all these trends were already in force, and you know.
I did.
Okay, tell me.
All right, so yeah, the economy is doing better. Yesterday, our PMI numbers, it wasn't just the U.S., China, Japan. Manufacturing is all kind of zigging when usually we see a zig and a zag, and that's great. The global economy is definitely getting better. But no, I definitely give Trump some props in that he spurred something that we haven't seen in a long time, and that's why we're seeing this growth and reflation trade. So the optimism, the pro-business climate, the wheels are already in motion. So a lot of investors are worried, we're not going to get anything. If we don't get anything, then the market is going to go down. But the wheels are already in motion. We're seeing all talks about more business investment, and that's going to help productivity, and that's going to help the economy, and it's becoming a virtuous cycle. So I think the policies have really, just the mention of anything pro-growth has really sparked a lot of optimism and confidence, and that's going to go a long way. But underlying fundamentals are there, and company earnings have turned around. So that was just the base. Now it's more the icing on the cake, and it has been doing very well. And I think it will continue in 2017. A lot of people are worried, like, I don't know if this is really the true thing. It's the real deal. We're going to see some good things in 2017, and investors should make sure that they're participating in it.
Michael, when you spoke to the person that gets your thoughts, you mentioned that this is not why you're on, because you said stocks aren't as cheap as they used to be. So we're getting that nugget of wisdom out of the way. We understand. Okay, thanks for that. But you also point out that unless these things, this is also pretty, I think, conventional wisdom, unless these things happen, we're ahead of ourselves. And you're talking about tax reform, and you're talking about all the things that are engendering these good feelings, the cabinet appointments. They all have to come to fruition to justify where the market already is, and you think it could be a rough ride. I think a lot of people are making that point, too.
Well, you know, it occurs to me that there's a lot of optimism built in that things are going to go right. But if you think back to 2009 when Obama took office, he took a full year to get a lot of the economic packages and even Obamacare effected into law when he had control of Congress, just as Trump does now. So there could be many a slip twixt cup and lip, as it's said, and I think that the markets are vulnerable to some kind of a pullback should that occur. And, you know, at the same time, we are looking at much stronger corporate earnings this year than last year. We are looking at an improvement in business spending for the first time in at least a couple of years. The strong dollar is not getting so much stronger so quickly. It's actually on a very gentle ascent that we shouldn't have a real problem with manufacturing or exporting. So I think that longer term, through the course of the year, the fundamentals are in place for a very good year. Trump or no Trump, the corporate picture is looking quite good. But there's no question that, in my opinion, we are vulnerable to a pullback here and there when we get a problem in the headlines that something didn't quite go as planned. And I would use that as an opportunity to load up some more, at least on the equity side. I think bonds may have a rougher ride this year.
Michael, with respect to bonds, at what point do interest rates matter for stocks? How many more rate hikes by the Fed will it matter for stocks? Where does a 10-year have to be for it to matter for stocks?
It's going to be a long time. If we get somewhere between 2 and 4 rate hikes this year, and I don't know what the number is going to be, that's not an issue. Stocks can handle that. It's the real staircase of a quarter point every 6 weeks that is what's going to damage stocks over the long term. We're nowhere close to that yet. So it's not something that I spend a lot of time worrying about.
Karen, you're sticking with financials and materials in 2017?
Yeah, I like a lot of the sectors. I think the consumer discretionary sector, in addition to the financials and materials, has kind of been overlooked. And with these potential tax cuts, who could not like the consumer?
What slice of
when you
consumer
take
discretionary, Karen? I'm just asking because retailers are really having a tough go of it, and yet home builders,
I know,
that
well,
seems to be the winning trade, and that's all discretionary, along with media stocks for that matter.
Right, and I think that some of the retailers are, especially the brick and mortar retailers, are having a hard time. But I think that overall, all the growth policies and tax cuts in particular are just going to put more money in the pocket of the consumer. This is a consumer that already has a good employment picture. The housing outlook is good. So I think that they haven't really participated in the Trump rally. But if you take a look at revenues that are expected for 2017 and their revenue performance in 2016, that's an area that I think investors have overlooked. Same thing with healthcare. You know, healthcare earnings have been positive, but I think the returns have been negative in terms of investment because investors are worried about what's going to happen with the Trump administration. But overlooking sectors that could be good places to be is a mistake for investors.
Okay, we got to end it there. Thanks, Michael. Karen, Peter, you're here till 7, I think. All right, great.
In political news today, we are tracking key